Stocks may be sinking, but housing, yes, may be recovering. Another big sale of distressed real estate may signal the bottom of the housing market in yet another important region. The Related Group, that huge real estate development firm headed by George Perez, grabbed about 120 condos in Miami recently. So what does this big deal mean for housing? Peter Zalewski of Condo Vultures joining me now. He's based in Miami, but today he's in Las Vegas, site of yet another hard-hit market. Welcome to Happy Hour, sir. Good to see you.
How are you today, Rebecca?
All right. So tell me exactly give us some perspective. When you see companies like a Related Group, George Perez, you have the manager of PIMCO, that huge bond fund based out in California, looking at and snapping up distressed real estate. They must see something that the others like us see months later. What is it that they're seeing?
Well, what they're really seeing is in a place like Miami where 23,000 new condominium units were built from 2003 up until about 2010 when George Perez's last project, Loft 3, comes online. What they're really finding is while there seems to be a lot of quantity, the number of closings is actually surprisingly higher than anybody would have anticipated. Our organization has gone through and we've actually looked at closed contracts on these 23,000 new units since '03. What we found is 53% have actually closed. Many of the fund buyers are looking to purchase at least 50% of a project. So it's creating a little bit of some uncertainty for them. And the reason they want 50% is they want to be able to control the rental restrictions in the building as well as the maintenance fees or the day-to-day or month-to-month types of fees. So now as you start to see the dollar strengthen, you start to see the euro kind of go sideways, there's this anticipation, this anxiety about all this money that's been raised and ultimately is supposed to be deployed. There's this anxiety about how do we get in, and that's why the George Perez Related project is really sort of it's going to, I think, sort of break the logjam.
Well, and this is what we need to see, for this housing market to recover. We need to get rid of the glut of properties that we have in all stages, whether they're vacant land or places that are in the process of being developed or those still on the housing market. I think the key here, too, Peter, is that they're buying them for, pennies on the dollar sometimes, for maybe half of what they're worth. So, and if they can hold on to them, they're pretty much getting a really good deal.
Well, Rebecca, let me sort of put it in perspective for you. To build a tower in downtown Miami where this project went down, the hard cost, simply the construction, is about $250 a square foot. The land cost is probably going to be about $100 a square foot on top of it. So it's about $350 a square foot simply to build it before profit. This transaction is valued at $234 a square foot based on all our research where we went through and we looked at warranty deeds. So, from a discount perspective, it's about $350 to build all in, and it was retailing at $400,000 to $500,000. So it is getting very close to 50 cents on a dollar, and it is good quality product. I call it a Class A type of building. I call the location probably a B+.
Okay, so, but going back to the issue of the glut, having so much inventory, though, even like with George Perez, good friend of this show, he's, say, these 120 condos, but is he automatically putting them right back on the market? So it really doesn't help the housing market in the long term.
No, it really doesn't help it, but what it does is it gives him the ability, because of the purchase price, gives him the ability to rent out these apartments at just a fraction of what it would cost a traditional homeowner to be in there. So now he can start to populate these buildings. As he populates these buildings in year 2, year 3, he's able to ratchet up the rents, and then very quickly, when credit's restored to the market, because ultimately it will be restored, he'll now have a perfect group or stable of would-be buyers that he can convert from renters who've helped him carry for these 2 or 3 years it's going to take to ultimately put them in and let them be the end user. So it's really a shrewd move, and a lot of people are taking notice to what he's been able to accomplish, which is one of the reasons I'm sort of out in Las Vegas.
Oh, yeah. Why are you out in Las Vegas then?
Well, really what we're seeing is a lot of the Miami product is starting to move. It's starting to go under contract. I'm aware of 2 other towers that are under contract right now. Whether or not they close, I'm not really sure. But product is starting to move, and we're getting some concern that there might not actually be enough for all of the buyers we're dealing with. So we've expanded out to Las Vegas. We've expanded into San Diego, and very quickly we're going to be opening up in Los Angeles as well to try to take these buyers who might not be able to find what they're looking for in South Florida and put them in other duress markets such as Las Vegas, San Diego, and Los Angeles.
Very interesting. Thank you so much. Good to see you, Peter. Peter Zalewski with Condo Vultures.